Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Tuesday, November 8th, 2022. Interesting day. A lot went on and we did push higher both in the NASDAQ and in the S&P. The earnings reports are more what I might call second tier, or what used to be possibly one time first tier companies. And I'll talk about that in just a minute. The indexes themselves got caught up pretty much right at a major Fibonacci level in both. The NASDAQ got up to 0.618. The S&P got up to 70.5 or 70.5, 70.5%. And that through another trade room. So this is not my original, but I am told this is considered to be the sweet spot. This is from the old SPX pit. But it did, the S&P got above it, but came, and of course surrendered it on that little bit of a slide. I do want to talk about what's kind of going on. And I want to talk more in Elliott terms. And in a way, if I'm really, what I'm going to be referencing right now is Elliott itself. So it's going to be a discussion on Elliott Wave. And the thing is, it's like there's so many intricacies now happening on the candle chart, a little bit clearer when I drop it down to a line chart, but we don't trade off of a line chart. We trade off of the candles because it shows the extremes, and that can be important to the type of trading that I believe, or at least what I do. So, right, we have anomalies. Like here was one, a whole group kind of put together. And if this turns out to be an anomaly, it would also be like came running back down, took it right back. So you get a lot of this whipsaw going on, but also just corrective looking patterns. So one of the things that Elliott, and I'm sure I've said this before, that Elliott wrote about, and he left for other analysts, is that there's the look and feel. You know, it has to look and feel. So in other words, the way that the market is trading has to look and feel like the wave that you're attempting to track. And so putting it together here, it was a second wave, but of a minor degree. So it would be less than this. This was an intermediate degree, and it actually was much bigger than all of this. So, in any case, it does fit. I did move this over, and I'm using the actual low there to place minor one, because it just, otherwise putting it here, this is very strange. This is even stranger, along with this and this and that. So moving it over cleaned it up. And that's what is more important, because it continues to then stay in a corrective mode, which to me, that is the pattern itself. Even though this is 5, it's kind of very sloppy and does the spike finish. This major spike finish today. You know, taking it right up there, putting your stamp of approval on that limit, and then kind of coming down, waiting for it to go back up. So we pulled back, and then it started to just rally again, and then it got caught on the basis that suddenly, if you looked over, you saw Bitcoin was getting stomped on, and there was some large sellers. I had read that it was 4.4 trillion, and it was being put through, I believe, the government, through the Treasury or something. So it was an announced sale, and it did so far so good. Right? If you're thinking the size of money that just kind of walked in and needed a new home, it moved to $2,000, but that's pretty good on a volatile product like that. Anyway, back in the indexes, that is what they gave this reason for. I don't tend to not to before I'll put a label on. So again, I'm keeping the labeling it as there is the intermediate wave 2. This is the NASDAQ. And so I've got the minor wave 1. Minor wave 2, I'm putting that label in. This was a really nice turn, and it was very quick, and it was very persistent, and it went. And what I found more interesting was that on the short-term charts, the time frame, It stayed oversold. And like the 15 and the 5 kind of just waited for the 30 and the 60 to catch up. So the selling pushed. On the hourly chart, it did push down through the 50s, both the EMA and the SMA, and then it bounced back up. I'm going to take this down to the 15-minute, and you can see that it's even more distinctive. So I actually am believing now, if I look at this chart, that it's a 1, 2, 3, 4, 5 down for minor wave 1 of minor wave 3, and this would be a 2. So it's 1, 2, 1, 2, and now we're doing another 1, 2. So in all seriousness, if the market really does just precipitously start to drop, then this count is going to be 100% correct. That we will be in a third of a third of a third, and we should drop. And what I'm going to back out to that hourly chart, will be dropping because it's in the third wave, and that third wave will be looking to break that low, 106.32, and pretty much doing it pretty quickly. So just like bam, knocking it right down to here. And the only thing right now in my mind that I think that could do that are the CPI data, which is due on Thursday morning pre-market. Let me just take a quick stop, go over to a different trade chart. I want to go over some of the companies that are just absolutely getting trashed and were shining stars when they first came on as IPOs. And those were all of the car sales sites like Car Guru, CarMax. There was quite a few. Vroom. So Car Gurus, 57.25 back in September of 2018. For October, or for this quarter in 2022, stock is trading at $10.50. So it's down even after today. I know I showed this last night, but it's more interesting because the stock did rally slightly, but it's kind of a flat line when you look, and it's still 97 after being as high in September of 2020. So 2 years and a month and some, this thing is trading at 97 cents. Not $97, not $9.70, 97 cents. So these stocks, and they were Lyft and Uber were going to be shining stars. Uber so much so because it was an Uber Freight and Uber this and Uber that, jumped into what is commonly known as the FANG stocks, and they just stuck a U at it and on the end of it. And I'd always thought that was rather appropriate, but Lyft, the other all-time high, was in the first month that it went public, was 88.60. It put out its earnings and it's trading at $10 and just under $11. So it's like boom, boom. So a lot of the pressure again is now going to be going over to the top 7 that we always see at the top producing the moves that we're trading. So what I'm looking at is Apple and Amazon right now, Amgen, Google, and Meta, Microsoft, Netflix, Nvidia, PayPal, Tesla. They're all up in there, and they were, of course, trading higher, but the support to keep an index high also is being supported by Car Gurus, Vroom, and all of those particular stocks that were new IPOs within the last 2 to 3 years. And they may or may not make it through because we're really kind of walking into some pretty difficult times, and whether people will be using those services or even have the cash on hand to start doing it will make a big difference. Back at the ranch here in the NASDAQ, I am going to label this as a wave 2. However, with the volatility being as sketchy as it has been, and the fact that they really did bring it all the way back after taking it down when, for whatever reason, they did, because I believe that's how that order flow was predetermined for the times that they came in to do it. In any case, it almost reached 0.618. I'm putting a 2 there where if we're dropping into that third, so this is minute 1 of 3, of 3, of 3. And then this might be 2. And then whatever should happen, we should begin to drop, and we would drop precipitously and just kind of keep going. Break here, and keep going. Before really putting in a decent breath. So it could be a superior day to pick up a very quick pocket full of cash. Let's say you just get the future and you got it, and they take it, and it just goes. You're the helper because you just go, okay, I'll buy it back here, and they'll be like tripping over you. So in any case, that's what I think. That's what I would be looking for if that's the case. So there's going to be something else that's going to trigger and drop. And again, CPI is on Thursday. So we might get one more day of this. And therefore, I leave open the potential that it could turn and go higher. Again, hang out up here and finish the whole thing. Overall, I continue to look and say that this is corrective. These moves are choppy. These moves are sometimes very nice to trade. Sometimes you got to ride them down. Sometimes you got to really hold to your plan, which eventually will come through. But it's like when you got an algorithm that's just going to do it until it's done, it gets pushed. It gets pushed, and you still get your move later, but it depends on how and what your risk profile is. Now, again, these insights, this is nothing but corrective. Why? Because look at the mess. Impulses are clean. I mean, basically, this was an impulse. It's clean. You can see they're impulsing. This is garbage. What? No. Yes. No. So it's garbage, but it is corrective. So getting back to that conversation on Elliott, part of what I'm now doing is still going to call it a wave 2, but I'm going to be moving it around, not technically not to make it all nice and clean, but to make it clean and recognizable for what it is. Otherwise, you're going to get stuck attempting to really put all of this together under the rules and the guidelines. So without breaking the rules and guidelines, which I attempted to not do, and this doesn't, but you're going to stretch some of these plays to include the moves. So in other words, this ended the 5th, but it started immediately the second wave, launched right out of it. But then it did a quick ABC to put in the wave A and wave B, and this being wave C of that minor second wave. So I do feel it's complete. We may see it run back up to here. Got to leave that open. And if once it kicks in, I'm looking for it to break 10,636 and on down 5, 4, 3. Start looking at that sub 10,000 area. Over in the NASDAQ, over in the S&P, I'll get there eventually. It truly is the same story. But once again, the S&P is a little bit cleaner in terms of the Elliott, but it's the same story. We have anomalies all over the place. Like this, like it's going to go down, and then suddenly you get this gigantic spike and then flip back lower. But what was that spike up and what was the spike down? That's where I had to go, literally, to the close, which is this hourly chart or the line chart. And still, it was a spike. So what is it? 1, 2, 3, 4, or 1, 2, 3, 4, 5. See? It'll work. It's not the prettiest. It fits, so it goes, and you can move on, and the overall move continues in the same fashion. So we're still holding to a decent count within this next leg down, then I think we're back at a point where many people probably aren't looking for the depth that it might go. But we'll see. The trading itself has it was not the easiest. And then the S&P actually, it also wasn't the easiest. Again, this is taking us back to Friday. Then we got this gap in Sunday, which ends up being just wave 2 of C. And then we're off to the races. It does appear that what we did was a 3-4, and then we finished at 5 today, with wave 5 being the extended wave. So wave 5 of this C wave being the extended wave. And it was right above. Here we are. That line is the sweet spot. It's the 0.705 Fibonacci level. And that's set at 38.62, and the high was 67. And then it came back, tested, sat here for an hour and a half, and then bam, bam, bam. So it was a quick rejection. They bought it just as strong, and it was mostly because the Dow tended to be the strongest today, and when it jumped back in, they were buying the broader market along with the Russell. So it just kind of took everybody else with. So I think we can get a 1-2 here as well. But here are your levels. When you start to see it break 38.16, 89, 789, 757, etc., 3704, we're done. We're done. Wave 2 is out. Wave 3 is underway. That's the low of wave 1. That's what it's going to break. How low can it get? We've talked about it. Initially, you're going to be looking for 36. That's everybody's favorite little new level. It could make a lot of sense, or it could just kind of go through, do a pause, collect some, point of control, sit there for a while. Next thing you know, boom, here comes the next level, and they take it down. Next one down is 33, then 3,000. And these are Michael Harnett from Bank of America. They're not bad levels. I tend to think that we may eventually get below that 3,000, but it'll be a V bottom. It'll be a slam dunk. Because Michael Hartnett also discusses a credit event needs to happen to put in the bottom, both for interest rates, yields, etc., and to begin that next, what he terms bull market, but I would term up move into a rally phase, because in my analysis, that would be a cycle level B wave. So right now, I think we're coming down and we're working our way into the low, the finish of cycle wave A, but also primary wave C. So we're in a primary C wave down to complete cycle wave A, set the stage for a big cycle B wave rally. But we got a ways to go. I mean, we're still trading around 3,800. We're talking maybe we could drop another 1,000, 2,800, maybe. What's going to do that? Well, to be honest with you, I could come up with many things, but they'd have to make themselves truthfully known, or it'd have to be a shock to the system. Are there a lot of things that can really shock the trading system, the markets? Yes. There are many, many weak spots across the globe. Economically, it deals with commodities. It deals with a lot of things that are happening. And a lot of things need to be known to really move on. And if they're not, we could get a lot of adjustments going on. And that would portend to moving lower. So again, I believe we're at that level that it's going to be driven by an event. And right now, the only one that comes to my mind is CPI. And if they like CPI, we're going to go up. And that would maybe force a different picture. And I'm not going to go into that tonight and see how this all trades out. But it does kind of leave certain things in place, making it very strange. But this is just too corrective to keep plowing higher and start breaking above levels that we saw last week, like above 3,900, above 3,950. We're going to keep tabs on that. All right. So for tomorrow, we'll see, because again, no economic data is to be released. So that all comes on Thursday. So it's how the market wants to react to what's happening in the world. Could be interest rates, could be the dollar, Gold caught fire today very nicely. Gold zipped above 1,700 and stayed and closed above 1,700. So there's a big switch going on in gold. So we are seeing some rotations. We are seeing money rotate back into gold and silver right now, and into gold stocks, into also other, the junior miners. So a lot going on rotationally. And this is kind of what we get, depending on when they really start to rotate out of the big boys. And a lot of this, again, kind of came through right there. Apple traded back up closer to 142 today, or 141.5, something like that. Dropped all the way back to like 138 and then closed up here. So a lot going on, a lot good trades. Continue to follow points of control, value area highs, Fibonacci. Right now, these are the Fibonacci's for a continued move. So this is to contain wave 2. That's why I've kind of left them there. If I'm believing that that is done, then one thing that I can do very quickly, go back out to that hourly chart. Nope, I got to go back out to the daily chart, because what I'm going to be looking to do is put wave 3. But what I can do is go to that hourly chart, and we're going to be looking at minor wave 3. That's a good place to start. We're going to do extensions. So there's one. Nope, it's not right. Excuse me. Let me get that again. There we go. Down to 1, up to 2. Okay, so what we'll be looking for this thing to start, minor wave 3 would be equal to minor wave 1 at 36.43. There's your 3,600, because we got the support all the way down to 35.90. In my book, I'd like to see it drift down. So I'm thinking 36 down to 35.50 thereabouts may contain the third. We put in a 4, we do a 5. Then we're done with the intermediate 3. And maybe it's that 5 that gets us down to 35 to 33, down into here. But we'll run additional fibs when that occurs. Right now, this is just a smaller minor third. And again, being a 3 of 3, it should move pretty quickly down to these levels. All right, I am going to end it there. So we know what we're on the lookout, but yet we got another day. And again, there'll be an update tomorrow in advance of that CPI number. Have a great trading day tomorrow. Next update will be on Wednesday, September the 9th.